Hi everybody, Lance from thetatraders.com here. In this video, I wanted to go over a user question from a member we have in our Discord group. And they have a $25,000 account, and they wanted to see, just brainstorming, if how could they actually trade using that full $25,000 using just the 112 strategy. So I actually calculated out the numbers in terms of number of positions to do, when to close out the positions, how much potential profit you could make, and let's actually go over the numbers together. I left the link in the description down below this video on a playlist on all these other 111 and 112 strategies. So this is a little bit more technical detail on the account size. I'm going to just briefly go over how to set up the 112 as well. So let's get right to it. All right, so we're going to go over how to trade the 112 strategy using $25 account. We're going to be using MES for these because using an ES will take up a little bit too much buying power. But first, we're going to talk about what the 112 is. Essentially, it's a longer dated trade. We typically go between 110 to 130 or so days out. So it's pretty passive. You can just leave the trade on and then let the theta decay the options as well. We're going to be buying a put debit spread and then sell two naked puts on top of it. The reason why we sell the two naked puts is we want to get some significant premium there. And we buy a put debit spread as a hedge that could potentially make even more profits if it goes into that trap. So again, we're going to use the MES futures since it is great on your buying power and also could make good returns, as you'll see in a recent trade that I did. So how do you set up the 112? This is on Tasty Trade. Right now I'm doing the video in the end of August. For MES, there is 108 DTE, which should still be okay. Typically I like to look around 120 DTE. So we could time these out where the next expiration would go around 120 DTE and you could start the strategy then. We're going to be buying a put around the 0.25 or so delta. So you're going to be buying a put around 63.75 or so. And then you're going to be selling the 50 strikes. So you're going to be buying that 43.50, selling the 4,300, and then that'll be the put debit spread part of the potential position. This will be for a net debit, so we want to be able to pay for that debit, and you can do that by selling the two naked puts. So in this case, we're going to be looking to sell two of the 3,900s, and should be able to get usually around 20, 21, around the 0.07, 0.08 deltas. I typically look for 20 premium on the naked puts and about 8 to 9 premium on the debit for the put debit spread total. So we're going to base it on those numbers there. Buying power is about 780. It is overnight, so it could be a little bit lower. Typically, I see these for around $650 or so. We want to leave about $400 or $500 more in excess cash. So uses about $1,100 in total buying power per individual position we do. And then we typically look to bring in about 35 in premium. Typically you're selling two of the naked puts for around 20, 21 or so. And then you're going to be buying the put debit spread for about 8 or so. So you end up getting about 35, 33 or so in premium. If you do a 5x multiplier on MES, you're looking at about $175 or so when you first enter the trade. So how do we time these positions and use of buying power? Because we have $25,000. It will take a little bit of time to set up all these positions, but once you have it going, you can just continue it over and over again. As some of the older positions cancel out and close, you can just have your buying power back to enter new ones in. So you can enter 3 positions, so essentially be a 3-3-6. You're essentially buying 3 put debit spreads and then selling 6 naked puts. And you do this every 2 weeks, close to around 100 DTE. I typically do these trades on a Friday afternoon or Thursday evening, and you could usually get around the 120 DTE mark at that point. I'll use about $3,300 in that individual 3 positions. And then you're going to be stacking these on every 2 weeks. So first 2 weeks, 3,300. Next 2 weeks will be 6,600. Next one, 9,900, and so on. About 3 months out, you'll have 6 total tranches because you have different expirations near the 120 DTE. each taking about 3,300 in your total buying power plus cash. And then we're going to close the naked puts at around a 2 premium, and then leave your put debit spread on as a hedge, because if the market drops after that, those could actually pay a pretty good amount of money as well. So this is what I actually wrote on thetatraders.com. If you're a member, feel free to send me any individual questions, and I could go over some of this in terms of how much money you could possibly make on these strategies. So again, you're going to buy the PDS for around 8, sell 2 naked puts for around 20 each, times everything by 3, and you get 24 for the total PDS. That's 8 times 3. And then the naked puts would be 20 times 2 of them is 4, but then times that by 3 positions. So 40 times 3 is 120 total premium that you're taking in on the naked puts. Then starting 3 months from now, you'll usually close the naked puts for around 2 each. If you have 6 total naked puts, 2 times 6 is 12 total premium. And the average amount of time it takes to close a naked put is about 3 months or 90 days, even though we're selling around 120 days out. So your initial premium was 120 from the naked puts. We're going to subtract 24 from the put debit spreads that we're buying as the hedge, and then another 12 or so that you're going to take to close out those naked puts. 120 minus 24 minus 12, you end up with 80 in net premium, and this should be with the put debit spreads is still on. We're assuming that the put debit spread would have a full loss here, even though it might not necessarily do that. So these numbers could actually be even better if the put debit spread works. So 84 net premium, MES has a 5 multiplier. You're looking at about $420 for every tranche. If you do 2 tranches every month, you can times that by 2 and get $840 a month, and you have your PDS hedge paid for. So with a $25,000 account, again, it will take a few months before you get it going. You don't want to just do all $25,000 at once. But if you do these every 2 weeks, you can stagger out your strikes better, and you're able to get to different strikes. If the market drops a little bit, you're able to sell the next naked puts even lower, and it reduces a little bit of risk that way. But making $840 a month eventually, usually takes about 3 months or so to start it out, is a good return to make off $25,000. So I've been placing these 112 trades every other Friday. I'll be doing that where it's very close to the 120 DTE. Pretty much very similar parameters that I just mentioned in this video. We do manage them by closing them out at 2. Occasionally I might close them out a little bit higher if it happens quicker. Like just today, we were able to close one out at around 3.5 premium, but I actually took in more than 20 on it, took about 21.75 or so. But we were able to close it in 73 days instead of the average is about 90 days. So I decided to take that trade off just because it made a good return in a short period of time. You could just leave this completely mechanical if you want to and just wait it out until you could buy those naked puts for 2 and then keep those hedges on. So again, every other Friday we're doing these. The other Friday I'm doing regular strangles on MES. We're looking for good buying power use there because we're selling a put and a call at the same time, and doing a lot of other types of trades like that. We're doing them strangles on different commodities like oil and gold, and just did one on soybeans recently. Also doing a lot of naked puts just by themselves. And I actually just did a covered strangle where we're okay getting a sign on an MES contract and then wheeling it and taking an additional premium that way. So a lot of different ways that we're looking in the futures account. Right now, I currently have a $39,000 futures account, and the numbers are going to be pretty similar to what I said there, also even higher based on all these other trades coming out. So if this might be interesting for you, feel free to join at thetatraders.com. I have a free 7-day membership. You could just test drive everything that we're doing. I'll give you guys access to all the channels in that first 7 days. And then if you have any questions, feel free to let me know in the Discord, and we could have a Zoom meeting as well to go over any of the strategies and how it might help with your risk tolerance. So again, I'm Lance from thetatraders.com. Appreciate everyone for watching the video. Like, subscribe, all that good stuff. Definitely helps out the channel. Appreciate all your support, and happy trading.